Good afternoon and welcome to NWR's Vantage Point conference, where up next we have Duratec Limited. We've got the company's Managing Director and CEO, Phil Harcourt, who has COVID, unfortunately, so he'll battle through this in isolation. But we've got the presentation up on the screen, which Phil will go through quickly, and then we'll have an interactive Q&A post the presentation, but which you can submit through the Q&A panel at the bottom of the screen. But Phil, I'll hand it over to you to go through the presentation. Thanks very much.
Good on you. Thanks, Simon, and good morning or good afternoon, wherever attendees may be. But welcome to Duratec. What's happened here?
Just pause there for a second while you get that up, Phil. That's no stress.
Does that come up all right?
Not yet, but just I'll let you know when it does. Sorry, Phil, can you hear us? Just pause there for a moment while Phil gets himself sorted. We're back, Phil. Sorry about the brief delay, guys. Phil, do you want to try and share your screen again?
Yeah, just in the process of doing that.
No stress at all. Not that one. So if you just go share screen, Phil, and then just select the PDF from that. Sorry, guys, we'll just be a minute while Phil sets it up. Perfect, Phil. All good to go.
Yeah. Apologies for that.
No stress.
Just in terms of who we are, one of the leading national engineering remediation and specialist construction contracting companies, extending the life and or repurposing infrastructure directly for asset owners. And we deliver in any 1 year in excess of 1,300 projects. If we look at the key business drivers listed there, they operate in all the markets and market segments that we deliver our services in. The primary market segments we report on currently is defence, buildings and facades, mining and industrial, and what we call other, which has power, energy, oil and gas, marine, transport and water and wastewater infrastructure. As you can see, we've got a totally national presence, and if you look at some of our unique competitive advantages, it's definitely our national footprint and the fact that we have key managers in every state, every territory, every region, and they are responsible for developing their budgets, liaising with their key clients in those sectors, and reporting their results. So it's we work in a very collaborative business manner, and the depth of experience and knowledge we have with over 1,000 employees is pretty phenomenal, and also one of the key competitive advantages. Certainly mend our mini consulting practice, where we've got 25 to 30 technical people and engineers who are adept and very versed in terms of corrosion mitigation and materials knowledge, add considerable value to our business from the point of view of early contractor involvement and the establishment of understanding of issues relating to assets that belong to our owners. The comprehensive range of capabilities and services that we provide are second to none in the business as well. So moving on to the next slide. In terms of our historical business growth, 32% year on year over the last 12 years is the average growth rate from inception back in 2010, and with primarily organic growth supplemented with a couple of minor acquisitions, MEND Consulting being one of those, and then culminating in listing of the business in April 2020. November 2020. After November, we struck issues in terms of COVID, which impacted the revenue figures you see in the chart. But since the second half of FY22, we've come through that, and importantly, back on track in terms of strong revenue and importantly, underlying profitability. If we look at the next slide in terms of revenue by region, we track both the West, where obviously we're in the early days, we were West-centric before establishing Eastern Coast operations in 2014. Since then, we've seen Eastern region growth quite considerable, and such that in the first half of FY23, we see the revenue in the East exceeding that in the West. This will tend to fluctuate as we secure larger projects along the way. If we look at the revenue by operating segment, each of those reporting segments displays growth from the previous comparative period, which is exciting for us and supporting our view that there will be continued organic growth with the business going forward. Just a bit of a snapshot here of some of the case studies of projects we've got afoot at the present time. This one being RAF Base Tyndall up in the Northern Territory, 15 kilometres from Katherine. So a remote location, but an important strategic base for the RAAF. And this project involves construction of 2 aviation fuel storage facilities, the associated delivery infrastructure, and all the associated pipe work to enable jet aircraft to be refueled. Quite certainly a challenging project from the point of view of remote location, weather conditions. Was up there about a month ago, and incredibly hot and humid, but the team have punched on and delivering an incredibly important project. By 30th of June, that should be around about 50 to 55% complete. Central Park, that's a good example of buildings and facades recladding. It's iconic in Western Australia and Perth CBD. Central Park built in 1992 and 51-storey building. The cladding is being replaced, and as a precursor to the works, we were heavily involved in the paid ECI phase, where the client spent 1.3 million with us as we carried out the due diligence in terms of understanding the structure, capturing very accurate imagery, stripping panels off to understand latent conditions behind the panels in relation to fireproofing, waterproofing, electrical and thermal insulation. One of the things we did find was that there'd been a retrofit to some of the panels to overcome vibration issues associated with wind effects on this building. And this had been retrofitted from behind. And you can understand if we'd blindly gone into this project without that knowledge, it would have been a considerable risk to the business and this particular project. So having that opportunity to work through the issues with the client up front and with their consulting team led to ultimately a $63 million project award. So one we're very proud of, and that project is tracking incredibly well and is about 60% complete. And we've had, as you can understand, working on a live building with fully occupied in the heart of the CBD, a very challenging project, but pleasing to see it's going incredibly well. Last one I'll show is Western Sydney International Airport. This is being delivered for the end client through Multiplex. Pretty challenging with weather conditions and also material supply in the first 2 months. But needless to say, we have this back on track, installing 10 kilometres of fuel ring main pipeline for the new international airport. And it's leveraged off the back of strong capability the business has in terms of fuel infrastructure. We've delivered something like 20 plus projects for defence and other clients, and we see that going forward in Australia as a potential area of growth for us. So I'm happy to field Q&A from here forward, Simon.
Perfect. Thanks, Phil. I might just get you to stop screen sharing there while you do that. Just a reminder, if you did want to ask a question, the Q&A button is at the bottom of your screen, and feel free to submit it. First question, Phil. Defence awards, they typically get awarded around this time of the year. How does the pipeline look?
Oh, look, the pipeline of works is really solid with defence. There has been a little bit of re-strategizing from the point of view of their defence estate works, but we're very flexible and taking note of the up and coming opportunities, and we've got good visibility in terms of the capital facilities infrastructure space. The number of tenders we have in there currently being considered is strong, and we see awards coming out in coming months in relation to that.
Perfect. Thanks, Phil. After a strong 12 months of growth, how does working capital look at the moment? Will you see borrowings increase as you take on more work / order book increases?
Well, in terms of cash, still pretty comfortable with where that sits. We have had some cash outgoings in relation to setting up new projects like the Coonawarra project, which is a $100 million wharf and harbour works upgrade. And there's been offshore procurement, which we obviously have to fund up front, which is quite considerable sums, but look, we're comfortable with where cash flow sits overall. We're pretty conservative with that.
And in terms of the top end of guidance, what needs to happen to hit that?
Look, we've got 2 months left of that. There's potentially some upside there in terms of EBITDA. We'll work through that over the next couple of months. In terms of revenue, it is what we happen to deliver over the next couple of months.
Yep. And in terms of the historic top line growth rate, do you expect that to continue to FY24, or that slow down, do you think?
Well, I think there's every opportunity there for growth to continue. Do we strike 32%? I guess our conservative view would be to be less than that, but it's not something that we necessarily focus on in terms of a number. We go for whatever opportunities we think are appropriate for the business, and we're finding we can be a little bit more discerning in the current market conditions, and our focus will be very much on getting disciplined growth and the underlying profit that comes with it.
Perfect. Next question. Can you talk to the competitive advantage that MEND provides to Duratec? Specifically, has it allowed you to win work from other asset remediators? And what's the demand for ANOView?
MEND is a tremendous assistance in terms of forging those early relationships with clients that have significant assets. And a good case in point here is the recent award of the BHP Berth C&D. MEND spent considerable months up front looking at Berth C&D and scanning that with drones and watercraft-based cameras, and pulled together a complete 3D model of that asset with high resolution, identified something like 9,000 defects, which enabled the client's engineers based in Melbourne to avoid going to site and be able to look at the defects and determine the scope of works going forward. The addition of ANOView, that sets us apart from any of our competitors because, yes, you can capture 3D models, but we're capturing it with full annotation of the defects, the type of defects, the size, the location, descriptions, reference to drawings, reference to specifications. This is a class act that no one else is currently doing, and the original developers of 3D modelling have looked at and thought, well, no one else is doing that. What is it that you guys are doing so well? So the uptake from other clients like Rio Tinto, having seen what we've delivered for BHP, is very encouraging. So we see strong support for MEND and its capabilities going forward.
I was just on mute. Phil, we've got about 5 minutes left, so a few rapid-fire questions. What's happening to margins at the moment? A lot's being made of staff shortages. How is employee costs tracked, and how are you feeling about tender margins? Do you see improvement over the next 12 months?
Interesting question. It varies according to market segment. But certainly in the mining and industrial area, we can be fairly selective in what we go for, and we've got the skills and capability there now where we're comfortable with pushing margins higher The defence, yeah, there's always strong competition in that area, but invariably, if you're a safe pair of hands, you can maintain reasonable margins. Do I see margin creep? I think we can maintain our gross margins in the mid to high teens. Importantly, EBITDA, which gives us that we get from operational leverage, I do see improvement in that over time.
Right, thanks, Phil. Can you speak to how you see the oil and gas opportunity? Can it grow to be as large as the defence business?
Yeah, stepwise, yes, I think it certainly can. We're seeing with Wilson's that's an awesome acquisition that we've made there. We've leveraged it just in FY23, and we see further leveraging of that as we restructure some of the workshop operations, bring new technology into it, and open it up to opportunities that it currently doesn't have. Coupled with that, I think wise use of cash in the balance sheet from the point of view of acquisitions. A similar type of business on the East Coast would be quite sensible, and we'll go through due process to be able to make the right decision there, but to gain access to oil and gas opportunities on the East Coast would certainly be beneficial. And yeah, there's a lot of work to be done in that oil and gas area as we're seeing.
And just a continuation from that, Phil, what's driven the growth within the Wilson pipe fabrication, and what do you sort of think the potential is in FY24, assuming it's going to be accretive to group margins as well?
Certainly works that were carried out at Waitsia at Dongara gas field LNG project, which is just south of Geraldton in Western Australia. The work package there certainly increased revenue and profitability in FY23. Plus, there's been some minor tweakings, as I referenced before, in terms of diversification of the works and increasing efficiencies through the workshop fabrication process. We've put a night shift on, and we're able to get operatives that have been offshore coming back and working in the fabrication shop rather than sitting idly waiting for the next offshore project. We see that going forward into FY24, and as I said, there's Impex, Woodside, and other oil and gas operatives other than Santos that will be drawing Wilson's into in FY24, and they're also going to be doing fabrication work for us, which would normally Duratec would be subcontracting out to others. So I think it's the best ever acquisition I've seen, and the enthusiasm from that group is unbelievable.
It's pretty high praises, Phil. That is a pretty good note to finish the presentation on. We did have a number of other questions that we will get back to on the email, but if you did want to organise a one-on-one with the guys, with Phil and Chris, they're more than happy to speak to the business. They own a big chunk each of the business, so they're incentivised and well aligned with shareholders. And well done, Phil, in terms of a really strong last sort of 12, 18 months with a strong forecast predicted as well. So watch your space. Phil, thanks so much for joining, and thanks all for attending. Thanks very much.
Thanks, everyone. Thanks, Simon. Cheers.